Welcome to episode 15 of my Robinhood Portfolio. And today, the portfolio has spiked up $96.76 for a total return of -$2, or actually -$3 in the after hours. So we're going to talk about it all, guys. We're going to talk about the market in general, what the market has been doing, my outlooks for the market. We're going to just dive right into this we're gonna dive right into my portfolio. So without further ado, let's talk about what I think about how the markets have been acting. Right now, we are in earnings season. A lot of earnings reports have been coming out. I think Google, Alphabet, they had an earnings report yesterday that really struck pretty big. I thought that they beat earnings very well, and that's really what moved the markets today was Google, Alphabet having really stellar earnings, and they beat earnings, they beat revenue, and it really moved the markets. A lot of people were excited, but yeah, I mean, really, right now it's just earnings, right? Right now, there's earnings. There's still the fear of tariffs being put out, and when tariffs get put out, certain stocks go down, like Caterpillar, Boeing, all the industrial stocks really get hit hard when tariffs are announced. So again, it's really just a wait and see game. I mean, we got the big one coming up. Amazon's coming up. I think Texas Instruments, they reported their earnings report. I thought that they had some pretty good numbers all around the board, but I mean, guys, really, it's really not just what Wall Street expects a stock to earn per se. There's a lot of factors that go along into playing earnings, and this is the reason why I don't really play earnings all that much. I don't really buy a stock based off earnings, because I looked at AT&T today and I was getting ready to buy it, but since all these earnings reports were coming out, I just wanted to see when was their earnings report was going to come out, and it came out today. And so I think they missed revenue. I think they didn't meet their revenue and expectations. But I guess the point I'm trying to say is there's many factors. There's many factors about these earnings reports and what these earnings reports are doing. And it's not just a report. I know there's a lot of people talking about growth and did they beat on revenue? But there's guidance too. There's how does the outlook look for this company? How does the future look? Or how is their marketing going to get better and better as the years go on? And I think that's really the big reason why investors pull the trigger on some of these stocks, why these stocks get hit hard even after having stellar earnings, because you can beat revenue, you can beat expectations, but if you have poor guidance and there's a poor outlook when you're doing your earnings call or whatever like that, you guys are just saying, hey, just keep buying our stock because everybody likes us right now, and who knows what's going to happen in the future. Investors don't want to hear that. They want to hear what is this company going to do for me down the road? How is this company going to give me growth and dividends and all this other stuff down the road? So when I'm about 50 to 60 years old, I can have cash flow just steadily coming in, and our portfolios, not my portfolio, but your portfolio, our portfolios are at some $50,000 or something like that. So it's really guidance. There's a lot of factors. There's revenue. There's balance sheets. You just look at it all, guys. I really recommend sitting through an earnings call and just see what they talk about. And a lot of investors do that. They sit through an earnings call, and if they don't like what they hear, the stock becomes volatile. It goes up, it goes down. Some investors like the outlook, and some investors are a little bit skeptical about what the company is doing. So my portfolio really has been doing well this past month. We are up about 3%, and for a total return of about $400. But the markets in general, we're right into this earnings play. The big one is Amazon. I think that's what a lot of people are waiting for. Apple. Apple's a good one. I think everybody's waiting for Apple. I think I think Verizon had reported theirs. We saw AT&T dip just a little bit. I think, like I said, they missed revenue. And I have Verizon. I was getting ready to buy AT&T today, but I didn't. I'm sitting on a lot of cash. We've breached $12,000, and I'm headed to 13,000. Like I said, guys, I'm trying to get this portfolio to at least $20,000 by the end of the year. But again, it's all about making the right moves and making the right play. So let's dive into my portfolio. There really hasn't been a lot of changes with this portfolio. I think there's only been one significant change that I looked at. 10 stocks. I believe this is 10 stocks. Total. It's not really a large portfolio, but there are some major positions here the stocks that I just like, stocks that I like heading forward. And I think the only move that I really did was buy Apple. I think I've talked about this company a lot. I talked about this company a lot before in the past. I know it's a little bit risky buying so close to earnings, but I have a lot of faith in Apple, and I've left some money on the side purposely to buy some more of Apple if their earnings report doesn't excite investors. If the stock starts tanking about 5 or 10%, I'm going to pick up some more shares. So we sacrificed Texas Instruments, and I think it was NRZ and New Real Estate Investment Trust or something like that. I really bought NRZ just for the dividend. I didn't really know what the company was all about, and this is what I'm talking about, guys. You want to be in companies that you trust, that you know about. This is the reason why Boeing is right back into my portfolio. I know this company. I've owned this company in the previous videos. I know it like the back of my hand. They make deals every day. They have a earnings report coming out in the morning, I think, for about $3.40 EPS. They can beat that, but I don't think this earnings report is going to go. It's not going to be like the last earnings report. I think they're gonna meet expectations, but it's not. I just have a feeling that this earnings report is not going to blow people out of the water. If it does, I tip my hat off to Boeing, because they make deals every day. I mean, it would not shock me if they did, because seriously, literally, my Seeking Alpha reports have Boeing just making deals left and right. They really just make deals, and it's totally insane. I'm really surprised how this is not a $400 stock. I'm not. I just don't understand why. I guess it's because the tariffs they're always getting announced, and again that really hits the industrial sector hard when tariffs get announced. But this is a $400 stock. If you again, I said this about with Amazon, and I thought that Amazon was a $2,000 stock, but Boeing's a $4,000 stock. I believe it. That's why I'm just buying some more shares. Last time I had 3 shares of my average cost was around $287, and right now, look at that. I'm up $81 already. I'm up $81 already with Boeing. So this company's been good to me. This company's been very good to me. I know them. I trust them. This is where you want to park your money, with companies that you know and trust. It's not to say that I didn't trust Texas Instruments. I know what Texas Instruments does. But again, I love these companies that I want to be where the rich people are. And I want to be. I'm not saying they're not in Texas Instruments, but Apple is $1 trillion. It's $1 trillion company. The market cap is headed to $1 trillion. The PE ratio tells me that it could be undervalued. Dividend yield is going up. What more is there not to like? So I looked at Apple and I said the valuation. This is one of those stocks that the valuation does not matter to me. It doesn't. It doesn't matter to me. Like Amazon, this is why I buy Amazon so high, because the valuation, it just doesn't matter to me. If it dips, I just gonna pick more of it, because the rich are putting all their money into Amazon, and Amazon is just shooting to the sky. So let's look at Amazon today. I think they rose again up to $27, and I just think that this stock is headed to 2,000. It's headed to $2,000 because they do absolutely everything. They have Prime Day, even though that didn't go as well. I think there was a lot of glitches on the website as far as Prime Day goes, but they just do everything. They do everything, and then we have holiday seasons. The holiday season is going to be here right before we know it. And I think the last holiday season, Amazon killed it. Amazon really killed that last year's holiday season with Amazon Prime and everybody just buying up stuff on Amazon, Christmas presents, just everything, guys. And this stock just shot up. I was looking at it back in 2017. I think it was around 1,000. It was around $1,000 mark. It was around that $1,000 mark. And look at it right now. Look at it now. It's almost $2,000. So again, I trust Amazon. I trust Amazon. I love Amazon. This is where everybody is at. Everybody's putting their money in it, and Amazon is you go for the home run with Amazon. You just don't go. You just we have the Walmarts of the world. We have the Lowe's, the Home Depots. Those will get you to second and third base. But Amazon is the home run. That will send the ball out the park. You want to be in stocks like Amazon. We look at stocks like Microsoft. It's a company that I trust. It's a company I trust because I use their products every day. I use their products every day just to do work. I need to use Microsoft, PowerPoint and Microsoft Excel and all this other stuff to do my work. So I trust them. It's a stock that I really like, and I picked up some more shares. I think I had 5 shares, so I picked up some more shares. The indicators say that this is overvalued, PE ratio very high, but I literally do not care. Microsoft, great company. That chart right there is I think is I compared to Visa's chart. It's really just straight up. There's barely any dips. Great company. Great company. When you see charts like this, this tells me that the company knows what it's doing. It knows what it's doing. It's having stellar reports, and they just keep on rolling. And you want to be on that train. So Johnson & Johnson's been really spiking up here. I'm probably never gonna sell these shares. And I know I said that before about Boeing, but yeah, $89. That's nothing to sneeze at. Huge dividends. I don't know why people didn't buy this when it was around $120. That to me was just a steal. This is Amazon. Johnson & Johnson is the Amazon of healthcare. They are very, very diversified within the healthcare industry, and I know a lot of people have been talking about, they have, I think there was like cancer reports or something like that they got to pay back money and all this other stuff. They got to go to court and whatnot. But again, they're proven. They have a proven track record of paying that dividend and increasing that dividend. I don't think that PE ratio is right of about 300. I don't think that's right. I have to do my due diligence on that. But the market cap is almost $400 billion. So, I know a lot of people like these other health stocks that are really pharmaceutical healthcare stocks like AbbVie and I think it's Merrick. I think that's what it's called. I know a lot of people are really playing it risky by jumping into, I think it's called Portola Pharmaceuticals. But this, I park my money right here. I have no problem buying up Johnson & Johnson if it ever gets back down to $120, which probably won't be getting back down to $120 for a long time. So it's a dividend king. They've increased their dividend. They have a proven track record of increasing their dividend for the last 50 years. So, what more can I say? Starbucks, I got it on their dip. I still think Starbucks has a niche in today's world. They make those coffee products, which really to me just screams. Just screams to have a lower PE ratio. It takes nothing to make coffee. It really doesn't. It takes nothing to make coffee and sell it for $5. Once this company puts it together and they just increase their marketing just a little bit more, and the reports start coming. The reports are clear in China that they are marketing at another level. I think this stock is going to jump to $100, and I know that's a big claim, but again, I mean, a lot of people talked about McDonald's. A lot of people talked about McDonald's and how they were just, you know, around the States. And then look how far they've expanded. Look how far they've come from selling their hamburgers at 29 cents to now, you know, a whole Big Mac meal for about $5. So, you know, Starbucks to me was undervalued. I picked up some shares and I'm up about $30 on them. This portfolio is a little bit tech biased. You know, there's 3 tech stocks in here. But I mean, it's a good portfolio. I'm still diversified. Healthcare, discretionary, financials, Procter & Gamble, my staples. I love Procter & Gamble. I love how they are diversified in the staples market, up $75 on them. Southern Company, I haven't sold these shares for a while, up $46. A very good utility stock. I think them and Nexera Energy are the best utility stocks on the market. Verizon, Boeing, Apple, Microsoft, and Amazon. So 10 shares. We're at the $12,000 mark. We've breached $12,000. And, you know, what more can I say, guys? What more can I say? The portfolio is up almost $100 a day, so I'm doing something right. The big one is Amazon. Again, I want to talk about, I know I talk about Amazon a lot, but this is the stock that everybody is waiting for to see if this stock beats earnings. And it has a good earnings report, and if it just crushes earnings, we're going to see a lot of tech stocks go up, and I think this is going to be a huge market mover, like Google, Alphabet. That once they hit their huge earnings report and they beat it, and the people saw the numbers and they were like, man, they beat it really handily. It moved the market. The market had a green day, so everybody's just waiting on Amazon and the Apples of the world to release their earnings reports and see how the market looks at that. So I'm go ahead and cut the video, guys. Comment, rate, whatever. I always enjoy doing these videos, and I'll see you next time.